fact, I'm joined live from Zurich by Thomas Herrmann. He's a global economist for Credit Suisse. So what are we going to hear from these central bankers?
Well, Mr. Bernanke has the opening speech today, and I mean, his general tone is going to reflect probably the pretty downbeat assessment of the latest FOMC minutes, or the meeting statement. He will probably discuss, and that's what markets are probably scrutinizing the most, the decision to reinvest MBS and agency debt, which the Fed has on its balance sheet and which is maturing or being prepaid. And he might, and that's also something markets are going to be very keen about, he might discuss further policy options beyond the quantitative easing that the Fed already conducted.
Now, Thomas, what should Bernanke and Trichet and Shirakawa be doing to get the economy going, to solidify, to bolster the recovery? I mean, is printing money, more money, the answer?
Well, I think, first of all, it's very important to note that inflation it's very normal for inflation to fall during and after a recession, and that's actually what's been happening in this episode again. Of course, this recession has been very severe in many countries, and therefore disinflationary impact could sustain for a bit longer. But I mean, the IMF just recently concluded that normally after 2 years, inflation bottoms out and then picks up again. And we actually think that the recovery will continue, so we do not expect an imminent extension of QE by the Fed, for example, and so we don't think there's any imminent policy action pending.
It's interesting that you say this, because in the past few days, more and more market watchers have been talking about a double dip. They've been kind of increasing the probability of a double dip. You heard Nouriel Roubini say there's now a 40% chance. Others are saying a 50% chance. Where do you stand on that?
No, of course. I mean, the uncertainty has increased substantially over the recent past, with especially the U.S. data releases coming in very, very weak, and probably weaker than anybody expected. However, I think it's important to put things a bit in perspective here, because the second quarter in many aspects was very strong, especially in Europe, less so in the U.S. We will have the downgrade of the GDP estimate for the second quarter today. But some of this is payback from a strong rebound after a very sharp recession. We think, looking forward a few quarters, that the recovery will continue. It's just going to be probably a bit softer than after previous recessions, due to several structural challenges, including debt reduction, both on the public side and the private side. But on the other side, we also see some encouraging signs, even in the U.S., where, for example, lending standards by banks, and that's something the Fed, of course, is very concerned about due to the lack of transmission of monetary impulses in the past 2 years, are actually improving. Now, that doesn't mean that we could see or expect a big credit boom or a credit-fueled recovery, especially because demand for credit also remains weak. But we can expect, in our view, a continuation of a gradual recovery, and certainly, or most likely, can avoid a deflationary outcome.
Thomas, very quickly, what kind of reaction are we going to get if Bernanke does express more concern today? I mean, I wonder if he does, if the ECB, what the ECB's response to that should be, because, of course, the U.S. has a huge impact on Europe's economy.
Well, I guess the most important question is what the market's reaction is going to be, and that's a tricky one, because if the Fed were to step out and become much more pessimistic, that could be a big blow for sentiment, and the Fed knows that it has a very, very important role not to destroy sentiment, so to speak. So I think Bernanke will be very careful in his message.
All right, thanks very much. Thomas Herrmann there from Credit Suisse.